Well, yes, in focus we are having Mahindra CIE Automotives, and the stock itself has hit in its all-time high levels in the day's trade. Volume buying has been also strong, and if we see over the last 1 month itself, the stock is up more than 30%, and if you take it a year basis, it's more than 70%. But now let's look at what are the key re-rating drivers for the stock. And firstly, and the most important thing, is the management's intention to sell its European Union's forging business, and that is expected to be hived off. Now what happens? ROCE numbers are expected to go up to almost 18 to 20% as per ICICI Securities, and also do remember that there would be a fund inflow expected in the company as well. Now apart from this, company is having two important customers such as Tata Motors as well as Mahindra and Mahindra, and with their increased footprint coming in the passenger vehicles space and also the demand of EV components rising up, this augurs well especially for the top line of the company. Apart from this, the company is a net debt free company, and also the important thing is the input costs have been cooling off and the company is working towards product efficiencies. Now that is the re-rating questions. Now the brokerage take what it is. The first is ICICI Securities. Over here they have maintained the buy rating, but the target price has been revised. Earlier 374, now it's 466, and two important triggers coming in. The first is an improved earnings outlook coming in, and of course an improved in the free cash flow also expected. Now apart from this, there are certain risks involved as well. Now if there is a weaker than expected growth coming in for the passenger vehicles for both European and the Indian markets, then it might be a risk for the stock. And apart from this, the inability for the margins to scale up in the Indian business is also a cause of concern for the stock. And lastly, in case the company is unable to sell the European forging business, then it becomes a problem. Now looking at the valuations itself, the brokerages are still stating that the valuations are attractive, coming in at almost for calendar year 23 at 13 times its P ratio, and for 2024 it stands at 11 times.